The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Philippe Gelis, co-founder and CEO of Kantox, a wholesale FX company. Kantox is a multinational fintech firm offering FX management solutions. Kantox is built to allow customers to manage their currency exposure, build hedging strategies, automate FX transactions, and process international payments in a smart way. The company was founded in 2011, serves over 2,000 customers, and has processed over $5 billion of transactions. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you enjoyed today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Philippe Gelis. Philippe, welcome to Rebank.
Thank you.
Can you describe Kantox for us and the services you guys provide?
So we build software solutions to manage FX for corporates only. We started 6 years ago. We are 100 people, London and Barcelona. We turn over several billions a year. And so we are in a good growth mode right now.
Mm-hmm. So, all right, I'm curious. If we step back, you guys started in 2011, you said. Before that, did similar solutions exist? They just didn't do the job very well, or did you guys fundamentally see a space in the market that didn't exist?
So I will say in the UK specifically, let's say that before that the market was split between banks, so traditional incumbents, and FX brokerage, which basically are offering the same as banks, with maybe a bit more specialization and in some cases more competitive rates, but it's fundamentally the same. Mm-hmm. What we wanted to do was to bring a lot of technology and, if I can say that way, digital value to clients. And what we understood is that in the end, FX is something you need in many businesses because you are just doing business internationally, but it's not something that brings real value to your business. I mean, if you sell, for example, to German clients, you will be paid in euro just because they are German, so they want to pay in euro. And managing euro transaction and FX risk on this kind of business is not something that should be really be time-consuming and require people to dedicate a lot of resources. So our view was to say, let's completely automate all these transactions with software solutions, and let's let people and companies really focus on their core business and not on FX. Mm-hmm.
All right, so basically you have the FX component is kind of like the back end almost for you guys, and really the value-add services that you offer on top of that are around, is it direct integration with their ERPs? Is it kind of integration to business processes?
Yeah, we are not fundamentally changing the FX industry, business, and dynamics. I mean, in the end, FX is when someone is buying a currency and someone else on the other side, the counterparty, is selling. So we don't think that we can really make a difference in the FX space. I mean, in the liquidity space. The market is turning over 5 trillion a day. Banks are massive in FX. So if you want to compete with them on liquidity, you don't make a difference. Where we can make a difference as a technology company is by connecting our software solutions to clients' ERP, be able to receive a massive amount of data related to payables, receivable in foreign currencies, and to have the clients then setting up hedging strategies on our software and having the machine managing and executing FX on behalf of the client 24 hours a day, 5 days a week. So this is where we bring value in this interface or layer between the client and really the market. Mm-hmm.
And I think I read on your website 2,000 plus customers and $4.5 billion in transactions you guys have processed.
Yeah, now we are above 5 billion. We are not really focusing now on turnover because in the end, turnover as one of my friend in currency cloud says, it's a matter of ego. And we don't care so much about ego in Kantox. We care more about the value we bring to clients and really the revenue. So in the end, we consider that what's more important than the number of clients is serving the right kind of client, which are in our case clients with daily complex FX exposure to manage. So imagine people that every day are executing tens, sometimes hundreds of transactions in foreign currencies. Managing this kind of exposure on a daily basis with people manually is just a nightmare. When you have a machine, a software that's managing this for you, it's really day and night. And you can focus on much more value-added task in treasury, which can be financing, investing your cash. So it's really a game changer in terms of the way you manage FX. We are going from people-based to really machine-based FX.
One of the reasons that I was looking forward to sitting down with you is because I've always been impressed by your kind of general insight around a range of fintech-related topics. Maybe we can start with a general one. How far along are we in the evolution of fintech, in your view? How much farther will this current cycle take us?
So that's a complex question. I don't really have a crystal ball, but I would realistically say that we have only scratched the surface. I really think that we are at the very beginning of the cycle. I think there are opportunities to innovate in fintech for the next 20 or 30 years. The finance industry is probably the largest industry in the world. It depends how you really make your numbers. But we have just started innovating in what I will name the client side, the UI side, the marketing side, the digital side. There are so many things still to change, disrupt, and rethink that I do think that there are opportunities for the next 20 years. What shows that the market has changed a lot, meaning 5 years ago, fintech was really about providing maybe not so disruptive services, but with a much better user experience, much more transparency, and much better prices. I think that now we are in a phase when fintech is focusing more and more on more complex technology, very often software technology to really manage complex businesses, to make complex decisions. And this is something that banks can hardly do and replicate because when you are a financial institution, you don't have this culture of building disruptive technology fast. So I think that this is also what will make that the market will be much more about cooperation between banks and fintech in the next 5 or 10 years than only competition as it was in the last 5 years.
No, I think that's an interesting observation, the one around kind of fintech solutions becoming increasingly complex. You've got people like Clearbank in the UK, for instance, like setting up a new clearing bank. What could be more complex than that? At the same time, we've seen a lot of, I guess, increasingly large funding rounds into Europe specifically. I think just the other day, Neighbour raised 115 million pounds, led by 100 million investment, I think, on the debt side from Goldman Sachs. You have SoftBank deploying hundreds of millions, billions of pounds into fintech. I mean, it does feel like we're transitioning from a period of 2-3 man startups innovating on the customer experience side to really deep tech, broad, complex systems that are really kind of supported by the incumbents in the space. So we talked so much, I guess, about partnership to date, but it's been around a bank buying in a new mobile interface or something. That was partnership, and now partnership is really strategic partnerships. I mean, you've got banks effectively investing to co-develop new core banking infrastructure, really complex thing. I was asked recently this perennial question of whether fintech was going to prevail, whether it was going to defeat banks, whether fintech was going to even be around 20 years from now. And I think my view is if you think that it won't be, it's purely a kind of misinterpretation of what's going on. Fintech will be analogous to financial services 20, 30 years from now. Banks will be fintechs if they're to survive. And I think you're right. It's very much the way things are going. Which areas of fintech, I suppose, on that note, do you see as most ripe for further innovation?
So this is the most complex question. Many people ask me very often. I will say that in general, and without repeating what we always heard about buzzing when you think about cryptocurrencies, and now it's all about insurtech and all that stuff, I think that any vertical in the financial industry will at some point see a lot of innovation. Maybe we'll not name it disruption so much in some cases, in the sense that I don't think that banks will disappear. I think that some incumbents will disappear. Other incumbents that are able to innovate and digitalize will remain. What I'm sure is that in 20 years, finance will be all about technology, because in the end, finance, it's just crunching numbers. In the end, nowadays, when we think about banks, we think about branches, because you can walk in London in any street, you will see at least a couple of branches. So now when we think about banks, it's really brick and mortar banks. In the future, it will be all about technology and digits and digital. So I think this will be a huge evolution, and in 20 years, we will not differentiate banks and fintech. It will be all about fintech. And innovation in general, I think it will be much more about rethinking and rebuilding the back end and all the infrastructure, all the rails, and not so much anymore the user interface. I think that nowadays, for example, I was with banks last week, having a great website and a great app is not really innovation. Now anyone needs a website and a mobile app. So these things are now mainstream. Now innovation is really about rebuilding what maybe clients don't see so much. So not the client interface, but anything which is in the back end and which make it possible to be much faster, much more efficient, to really leverage any opportunity to do business with clients, to serve clients better. So it's not necessarily something you see, but it's something that's probably the most important piece of financial services. The user interface in the end is not so important. It's like, think about cars and think about Tesla. They have not really reinvented the car. If you look at Tesla car from outside, okay, it's a car. There is nothing very disruptive. Maybe there is a large screen in the car. So real innovation is the engine, which now is more electricity than petrol. So I think it will be the same with financial industry. Innovation will be what you don't necessarily see as a client.
We touched before on some of these massive funding rounds and almost kind of what feels like a change in the types of investors that are getting involved now, and I guess their motivations being much more strategic than purely financial. I don't want to ask you anything specific to Kantox from a strategic standpoint, but if you're a fintech business in the market, you've been going for a few years, that must fundamentally change the way you're thinking about your progression going forward.
I would say that when we started, so the company was created in 2011, but let's say we started the project in 2010. So in the very beginning, it was extremely complicated to get VC money, because most VC didn't really believe in the ability of us and fintech companies to disrupt banks. So it was mainly angel money during, I would say, a couple of years. Then some VCs started getting interest. And then in 2014, I would say it started being massive. And now we are coming to the moment when I would say any kind of investor really see an opportunity in fintech, even if I think we have gone through the hype cycle. The really hype cycle, in my feeling, was when Lending Club was listed, basically. So it was a couple of years ago. It has cooled down a bit, and I think it's quite healthy. But what shows is that now, I would say no investor has any doubt that the opportunity will be big for the next 20 years. Maybe it's not anymore the time when people want to raise money to invest in marketing and UI. It's more when people want to invest in more hardcore or technology and rails and really software sophisticated solutions. But as you say before, now you see large banks like Goldman investing big in fintech, because basically they have understood that it's moving from a people-driven industry to a technology-driven industry. And what they understand that they have a massive amount of money to invest, meaning if you think any bank of a decent size is able to invest some hundreds of millions a year in fintech easily. So I think we will see a lot of ongoing investment for the next 5, 10, or 20 years. Mm-hmm. It's a never-ending story, and I think the competition in banking and in the financial industry will be much more about technology in the next decades.
Mm-hmm. It feels like we're kind of reaching a point of maturity for almost the first wave of fintech companies, Kantox included. I don't know, Currency Cloud, maybe Transferwise, arguably to an extent. Some of the guys that have been doing it for a bit longer and that have really built the fundamentals of a solid business, and it feels like we're entering kind of a wave of consolidation. People have been expecting that for a while. Do you agree that that's kind of where we are?
I think it's coming, but I'm not completely sure of when it will really come and the way it will really work. In the sense that very often when you have consolidation is when you have people really doing the same thing in basically all the same markets. So also all they consolidate because basically they want to stop competing and they want to get larger, or when they are very complementary in terms of markets or products. And I don't see many opportunities like this already. And if you think about some consolidations that happened in the last years, it has not necessarily been always successful. If you think about, for example, lending, there was some acquisition. I think it was Funding Cycles that acquired ZenCap in continental Europe. And then sometimes you discover that some markets are not really as attractive as your own market, that it's not as easy to really replicate what you did locally, internationally. So I think that most of these companies still have a quite good growth potential. So I believe much more in banks acquiring more and more fintech companies, that a lot of consolidation between fintech companies. And surprisingly, I always say, we are seeing a quite interesting type of acquisition in France, which is not the most advanced market in fintech. But we are already seeing quite interesting acquisition, especially BNP that acquired Connickel, which is a very interesting neobank in France, so very focused on the French market. You don't necessarily know it here, with a very disruptive model, successful company with a very good business model.
It's basically leveraging the tobacconist network to offer banking, right?
So they started with this idea of saying we have a lot of unbanked people in France, or people that really face high friction when trying to get access to banking services. And these people are not necessarily fully digital, so they cannot be served only digitally. So they basically used tobacconists to build a network of point of sales, physical brick and mortar, and they got very successful. I think they raised something like 40 million, but they achieved 20 million something revenue last year, profitability, and they got sold to BNP for more than 200 million, which is a very interesting case for a neobank, considering that a lot of them have raised a lot of money but are hardly making revenue. So it's a very interesting case, which basically shows that you can build your uniqueness not necessarily by investing in UI and marketing, but by building something which is really answering a non-attended demand in a very profitable way. So I think it's a very good example, and in my view, to date, it's definitely the most interesting neobank in Europe to date.
Given your work in the FX and payment space, I kind of have to ask you about cryptocurrencies. And so maybe we'll leave kind of the ICO stuff aside. But I don't know, Ripple, for instance, meant to basically support banks as kind of an alternative rail to SWIFT. Quicker, more cost-effective FX and payments. What are your views on the potential impact of Ripple? I'll call it, I don't know, blockchain more broadly to support FX and payments?
I have different ways of thinking about cryptocurrencies and blockchain. I will say first that the starting point is if nowadays you cannot use traditional rails to make a payment from London to Sydney in 1 second for 1 cent, it's just because banks and SWIFT have completely underinvested in rails for 50 years. Because oligopolies that are very profitable have no interest in investing in heavy technology and networks. So when people say that a blockchain is completely disruptive and because it allows you to make very fast and quick and cheap payments, for example, I would say, okay, fine, but it's not that blockchain is unique in that sense. It's just that we are still relying on rails that are completely outdated. If SWIFT has decided to invest in an ongoing way for the last 50 years, we will have already this kind of rails based on other technology. And in the end, I think that people don't care about the technology. I mean, when you go to Amazon and you buy a book, you don't care if it's cloud computing or servers installed in the company warehouse. In the end, it's just the technology backing up the website on which you are buying. If you are making global payments, you don't care as a client if it's blockchain or not blockchain. So the real value added of blockchain looks huge just because we are relying on technology that's completely outdated. So for me, there is a false sense of uniqueness and disruption. Then I will say that in the end, we should not forget that it's really a technology looking for applications. It has not really been invented to move money globally. It's just an application of the technology. And given banks started a couple of years ago being really worried about fintech and disruption, and they considered blockchain might be a really huge disruption, they started communicating a lot and investing a bit in blockchain. But between what they say when you read press releases or innovation managers speaking about blockchain and what's really happening, I think there is a huge gap, huge gap. And yesterday there was an interesting comment about Jamie Dimon from JP Morgan, you probably read it, saying Bitcoin is a fraud and ICO are a fraud. So in the end, you have two ways of thinking about it. An ICO is just to put a price on something which is arbitrary, if I can say it that way. But if you think about bank notes, it's also a price, arbitrary, that's really put on a piece of paper. What happens is that you trust much more the Bank of England putting an arbitrary price than just people online. So I don't know if it's a fraud or not, but what's sure if you think about cryptocurrencies and in countries where the system works well, is efficient, they bring really limited value. In countries where the system doesn't work, and it can bring a lot of value. So if you think about Bitcoin, for example, the price has been very dependent on crisis in Greece, Argentina, Venezuela. So honestly, in developed countries where the system work, I don't see the value really of cryptocurrency and all that stuff.
Where in the FX and international payment space, so specifically the areas that you guys, where you guys operate, where in that space do you see scope for further innovation?
I will say it's a space that has been very, very, very focused historically on two things, or three things: prices, profits, and capabilities. So prices basically means that if you are a corporate, for example, in FX, or if you are even an individual in FX, historically, many people have competed on price. I give the best price, so I get the deal, I make money, but the problem is that in the end, it's a race to the bottom. So when the market was all about incumbents, they were all making quite large margins. With fintech coming, it's much more competitive. capabilities was all about being able to do payment. For example, making a payment to France from London is easy. Making a payment to Brazil is not as easy. And making a payment to some countries in Africa is even harder. So it was really focused on this, on price, on capabilities, and when I say profits, on building what I will name, or what banks will name innovative products to make a lot of money. Derivatives, options, things that are super complicated, that no one understands, but that are very profitable for banks. So in my view, this was a market in which dynamics was really a bit stuck in the past and based on banks looking to make profit. Now I see that what's happening, we are coming back to the end customer and trying to provide real value to the end customer. And as I said before, in our case, for example, which is definitely the one I know better, when you are able to plug your solution to a client's ERP to receive, for example, data related to 1,000 receivables in foreign currencies registered in their own ERP today, and to crunch this data and to build and execute a hedging strategy in an automated way 24 hours a day based on this data, this is where you really bring value. So if I can make the comparison, what we are doing is comparable to when people were doing accounting on spreadsheets, and then they do accounting with an accounting software. So this is basically what we try to do. We are not rebuilding the FX space and liquidity. What we are building is this complex and very valuable layer between the client and the market. And this is where with software you can really bring value. Think also, for example, about SAP versus Salesforce. When ERP moved from being software-based to being cloud-based, this brought a lot of value. So this is where I think in FX and payment you can bring value, because in the end, people are all relying on the same rails and liquidity. So you can hardly differentiate on the long run if you're really building and competing on the same thing as most people in the industry.
Given your guys' setup and I guess the structure of your platform and the access you have to customers' ERPs, it would seem to me like you could expand the product offering to a pretty large extent. I don't know, something like invoice finance.
We could.
Have you explored that?
We could, but I would say, first, in my view, it's much better to be really focused on something and to be much better than competitors and to stay at the forefront of competition. So now, for example, we have something which is very unique, and I think we have probably 1 or 2 years of advance versus competition in the market. But if we do not keep on innovating, maybe in 2 years it will be a different landscape. So we need and we want to keep on innovating and being, if I can say that way, a technology leader in the FX space for corporates. We could definitely offer more things, but I think that in the end it's diluting your resources and in the end becoming maybe in some way supermarket, but without being really any kind of category leader. And I think we are still in a phase in fintech where we are building category leaders, rebundling, I would say, services and trying to have a range of services which is large and similar to a bank. I think we are still far from this in the fintech industry.
Companies like Revolut and Transferwise are addressing the consumer FX and payments space. How successful do you think they'll be?
But look, I think first, they are already successful. If I take the case of Transferwise, they started a bit before us. And I remember I've been hearing many people in the industries and in particular investors saying they are way too aggressive. They will just burn themselves. They will never succeed. They will crash. And then when you really look at their trajectory and when you read at the press and you look at some numbers, it seems that now they have reached a very, very significant size, a very significant revenue. It seems they are coming to profitability. So it looks at finally their vision and the strategy and the way they really manage the company has been the right one. So it's hard to see on the very long run, but they are definitely the market leader in retail by far. I think that now they are in a quite if I can say it that way, stable situation in the sense that they have a huge turnover. They have I will not say significant market share, but something which is really relevant in the UK and outside. And so I think they are a really successful company, and I think they deserve it because they spend a lot of time and really focusing on their vision, while many people were probably advising them to cool down a bit or to calm down a bit, but they did it. And what's interesting is then you see Revolut coming, which is not the same thing, but in the end it's a bit the same use case. Many people thought, look, with Transferwise and a couple of more, the market is now closed, meaning it's hard to build something new. And Revolut come and they get a huge amount of users. Same thing, many people I heard are saying that they have really an issue with their business model. They will never generate enough revenue. But look, Transferwise did it, so I'm quite sure that Revolut can do it also. And they look very passionate. They have this kind of, I think, positive aggressiveness. So I think they can both coexist and be successful. So,
you guys have offices, Kantox, between London and Barcelona. And I think you mentioned you spend about 50% of your time in each place. What's your view on the impact that Brexit will eventually have on fintech? I mean, you must have better insight into that than most people.
This is the question. I always say, and I remember one of my VC friend investing in Kantox saying one day to me, you can hardly dramatically change market shares in an industry in a short period of time. So this is another way to say that London is I never know if it's the largest financial center globally or second one, I never remember. But I don't think that even if Brexit is hard, I don't think that London will lose leadership in finance and in fintech. It will definitely be damageable. I think there is no doubt. Banks are already moving people out, and I'm quite sure that some people that came from outside to build fintech companies in London some years ago will not necessarily come back to London if there is a Brexit. They will do it from abroad.
Does that include you?
That's a good question because there are two things to take in mind. One thing is the Brexit, which is a legal and technical thing. The other one is market maturity. I mean, what we have built in 2011 in London, I hardly think we could have built the same thing in continental Europe. Nowadays, markets are maturing in continental Europe. So probably if we had to start today, we could be a Kantox from continental Europe. So it's not only a matter of Brexit or not Brexit, it's just that the fintech market is maturing globally. So this regulatory environment, which was very clear and friendly, if I can say it that way, to fintech in London 5 years ago, 6 years ago, now also exists in Germany, France, Holland, Luxembourg. So this is why I say that London is probably losing and will lose some market share, but I'm convinced that London will keep on being the leading financial center in Europe.
Before we go, I'd like to ask you a handful of rapid-fire questions. What are you most excited about in fintech and why?
I'm now quite convinced, I was, but now there are data to prove it, that there will be very large-scale fintech companies in the next 2 decades, meaning there is no doubt that there will be fintech companies which will really compete with banks in a different way, but in terms of market share, in many, many different segments. Being able to really rebundle the system and be able to be a one-stop shop as a bank, this is another story. But building very large-scale fintech companies, I think that there is absolutely no doubt that it's happening and it will happen at a larger scale. So the market will definitely be very different in 10 to 20 years. And I think it's very valuable for clients, being retail, being corporate. Competition is always good. And I think that fintech, independently of the size of the industry right now, has also had a huge impact in terms of how clients see financial services, use and buy financial services. So it's not only about revenue and market share. If I take our case in a specific market, for example, which is Spain, I definitely know that in Spain, many people in corporates are approaching FX in a very different way, thanks to what we did in the last 6 years. They are not necessarily client of us, but now they ask for more transparency on prices, better prices, technology, a good digital interface. So it's a very different dynamics than 6 years ago.
If you had it all to do over again, what would you do differently?
It was my first company, so our first company for all the founders. So basically, when you build company and manage this company, you learn a lot, particularly when it's your first one. So I always say, if I had to do Kantox again, I would probably build something which is 5 times bigger in half the time, just because I have learned so much that I will not repeat a lot of mistakes, sometimes stupid, that I did. But I think that the FX and payment space is a great one. We started, I think, at the right moment. I mean, we enjoy the journey. So I will just make it better, but I will go for the same journey, no doubt.
What advice would you have for someone interested in starting a fintech company today?
I would say that very often, and this is a technical advice, but people focus a lot in the beginning on the simple things, which are UI, first client, stuff like this, and try to get them as fast as possible and to grow as fast as possible. And very often you underinvest a bit in the framework you build. So this means that basically you probably underinvest in terms of regulation and compliance. You underinvest in how you build your back-end infrastructure, which is not necessarily super reliable. For example, nowadays we have many fintech companies here which are basically offering cards, so credit cards, debit cards, which are relying on some partners that very often are overwhelmed by the workload and are crashing and stuff like this. Just because you want to go so fast in terms of growth and clients that you just not take enough time and underinvest in your framework and backend. So I think this is something which is becoming more and more important in terms that the market is maturing. So what was enough to be in business and successful 5 years ago maybe not anymore. The same way that now if you build a website, even if it's for a small company, you need something that nice looking, with good navigation, while 10 years ago with a crappy website, it was enough. So the barriers really to get successful are higher. And I always think that investing well in infrastructure and backend and framework from the very beginning is important to be successful over the long run.
Philippe, what's the best way for people to find out more about your work and connect with you directly?
I'm quite available on social networks. So when people try to contact and speak on LinkedIn, Twitter, I try always to answer and be available. So I think it's quite easy to connect with me and with us.
All right. Philippe Gelis, thank you very much for joining us today.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.